Good afternoon to the Bobsguide community located in Europe, and good morning to our audience in the US. Welcome to today's Bobsguide webinar, which is entitled 100-Day Countdown to GDPR, Are You Ready? My name is Alex Hammond. I'm the Managing Editor of Bobsguide, and I will be monitoring the expert panel we have with us this afternoon as they discuss the changes and challenges that the financial institutions are facing in the lead up to GDPR on the 25th of May. The General Data Protection Regulation has the genuinely noble ambition of empowering EU citizens to control their personal data in response to new advances in technology and data capture capabilities, thereby protecting the individual's fundamental right to privacy under the Code of EU Online Rights, as well as the Lisbon Treaty. GDPR further looks to simplify regulatory proceedings for international businesses. What that means in practice, however, has been far from simple. In the last 12 months, businesses have been at worst in denial and at best in reluctant acceptance of the legislation, and have since been tasking their legal teams with making sense of how GDPR will affect them specifically. Our panel will look to make sense of GDPR, how it will affect budgeting, whether third-party GDPR solutions are the only way forward, and finally, the potential impact of Brexit on GDPR in the UK. Joining me to discuss these topics and more are Joanna de Fonseca, Associate at law firm Baker McKenzie, Privacy and Data Protection Expert and Consultant for Financial Services, Ria Halme, and Dov Goldman, Third-Party and Regulatory Compliance Specialist at Opus. Before we get started, I would like to thank each member of the panel for taking time to speak to us all today. I'm very much looking forward to addressing some of the outstanding questions much of the industry still has from your unique perspectives. And speaking of questions, we will endeavour to have a short Q&A opportunity at the end of the panel. If you'd like to ask a question to all or any members of the panel, please type it into the chat box on your On24 platform, and hopefully we'll have a chance to go through them time permitting at the end of the session. A good place to start would be to look at GDPR from the strictly legal perspective. Is what GDPR is asking for clear to the financial industry, and how does the legislation view financial institutions? Perhaps, Joanna, you could kind of address that question first for us.
Sure. Thanks, Alex, and good afternoon or morning to all of you who've joined today. Yes, starting with the strict legal perspective, first of all, in broad terms, where a financial institution is acting as data controller, so where it's collecting personal data about individuals and making its own decisions about what to do with that data, it will be subject to the same obligations under the GDPR as other data controllers, as indeed is the position under current data protection law in the UK and in the EU. It is worth flagging here that a key difference under the GDPR is that the GDPR will also impose certain compliance obligations directly on data processors. So here we're talking about those organisations that are providing a service typically to data controllers and processing personal data on their behalf. In contrast to the current Data Protection Act, which only places responsibility for compliance on controllers, as I say, the GDPR will impose a compliance burden, albeit to a lesser extent than on data controllers, on data processors as well. So that will be a key change. A question that we're getting asked a lot is about the interplay between the GDPR and the other regulatory obligations that financial institutions face. And in that respect, it's worth flagging that the ICO, the Data Protection Regulator in the UK, and the FCA have recently issued a joint statement on the implications of the GDPR for financial services firms. And so the regulators are very much working together on this. And in that statement, the ICO and the FCA confirmed that financial services firms will need to ensure they're ready to comply from May, just as all other data controllers will. And a number of the requirements that financial services firms will need to meet will be common to both the GDPR and the financial regulatory regime. Overseeing GDPR compliance will remain the responsibility of the ICO, first and foremost, but the FCA has also said that when it makes rules, it will consider how those requirements will affect the privacy interests of individuals, such as financial institutions, customers, and employees. I also just want to mention here that in addition to the GDPR requirements, Financial services firms, of course, are subject to additional obligations under PSD2, the Payment Services Directive, and the Open Banking Standard in relation to personal data. And in many respects, tough as the GDPR requirements are, those obligations actually go further than the standards the GDPR will require. Just to give you an example, interestingly, both PSD2 and the Open Banking Standard suggest that explicit consent will always be required to process customers' data in a financial services context. And there's a bit of a tension with the GDPR there, actually, because the GDPR limits cases where explicit consent is required to situations where special categories of personal data are being processed. And that typically won't actually include banking information. In addition to that, recent guidance issued on the GDPR by the Article 29 Working Party of the EU data protection regulators on that topic actually seems to counsel against over-reliance on consent. So you've got the FS regime on the one hand, effectively seeming to say that explicit consent, no less, so not just consent, but explicit consent, should be the primary legal ground that you look to process personal data in a financial services context. And then on the other hand, you seem to have the GDPR regime and data protection regulators saying actually consent is not necessarily the best legal basis to look to. So it's going to be really interesting, I think, to see how regulators decide to square that particular circle. But the bottom line and the point that I really want to make here is the financial services regime does actually impose tougher requirements in a number of respects than the GDPR. So there's kind of this two-tier thinking that we need to be following when we're thinking about how this applies in the financial services context.
Fantastic, thank you, Joanna. Ria, what are your thoughts on that?
Well, I think Joanna brings out really good examples. What I could add to this is the general implementation of the GDPR, which is dependent on the risk involved with the data processing. And well, financial field is highly regulated, and the processed data is many times sensitive. There's a very low risk tolerance. So in practice, it means that the financial sector is expected to be implementing quite a comprehensive and extensive GDPR program, and also BAU processes after May. Also, what's important in my views is to follow the member states' national laws. There is a certain margin of discretion that is left for the member states, and in general, discussing financial field, for example, the insurance sector and legislating this is under the competence of each of the member states instead of the European Union. These kinds of principles apply also in relation to security. So we have different FCAs in the member states, and there are different levels of standards and requirements that these impose on the entities acting in that specific member states. Of course, in general, the standards are high, but it would be really good to keep an eye on the specific requirements of the jurisdiction. This is very much highlighted in the context of the company operating within several member states within the European Union or the internal market. There's national exemptions and differences, and even though this is not specific only to the financial field, but because of the sensitivity of the data, it is of highlighted importance.
And so we ask our audience if they'd like to submit questions to the panel in advance of the webinar, and sort of perhaps unsurprisingly, many of those submitted questions already have focused on the immediate ramifications for non-compliance on the 25th of May and how GDPR can actually be policed. Ria, how have you answered those questions from your clients?
Well, I think this really depends on whether to concentrate on the in-house controls to ensure compliance, or if it's about the enforcement by the competent authority of the member state. For the in-house controls, it is up to the controller or the processor to impose certain measures, internal audits, monthly reporting, good record keeping, and data mapping that can be also helpful in the overall record keeping. Incident and breach management models and training must be on a high level. There is a generally acknowledged saying that the best model on paper will not be effective if the people actually don't enforce it. So it really comes down to teaching your own personnel how to follow through in everyday data processing. And of course, engaging the board and the C-suite is important. Building an effective in-house data protection office and cooperation with the DPO, the business, and the IT and security. On possible sanctions and enforcement by the enforcing authorities, this is of course a little bit of a question mark. No one can predict how it will go. There are some guidelines that, for example, the ICO, the enforcing authority of the UK, has given. They have said that they will not be using sanctions as a first method of enforcing the GDPR, but they will aim for teaching and borrowing the words of the Information Commissioner, using a carrot instead of a stick. So the rumors about 25th of May being the day when everybody receives a high fine, she would like to clarify that this is not the case. In France, the CNIL, which is the enforcing authority for the data protection and GDPR, they will be taking a quite practical approach in their own words. They will be looking into the new rights and their implementation during the first few months, making a differentiation between the old standards and requirements and aiming to help the companies instead of taking the sanctioning model as the first measure. I think the most important message that these statements from the authorities is that you need to have a credible program, documentation, and you need to be able to demonstrate that you're actually going to the right direction. Also, in relation to enforcing, the GDPR does bring rights to the data subjects, and one of these is the ability to complain to the Data Protection Authority and to also seek judicial remedies for breaches.
So, I mean, I think we're all in agreement that the GDPR is legislation that must be high priority for all businesses, including financial services, particularly with respect to the new consequences of data breaches. So how should those new consequences for data breaches introduced by the GDPR reshape banks' IT budget? Perhaps we can bring Dov into the conversation here.
Thanks, Alex. I haven't heard of any banks fundamentally changing their IT budgets as a result of GDPR. I think one likely impact of GDPR is a focus on privacy by design, a term that I've heard more and more since GDPR came into focus. And yes, the concern du jour is data breaches, but the way to protect your customers' data is to focus on the fundamentals. What is the value of customers of giving us their data, and how do these customers benefit? And then what is the life cycle of that data on all of our systems? And that are the third-party data processors that play a part in that life cycle. And how do we protect this valued data all the way through this life cycle? Privacy by design means we align our technology with the value the customer ultimately receives. So we're looking at the data breach problem from our perspectives, in this case, thinking about it from the bank's perspective. And I think that it's important, and GDPR is really forcing us to turn it around completely, to look at it from a much, much more important perspective, that of the customer.
Yes, and I would certainly agree with that. John, how would you address that question from the legal side of things?
Well, I think Dov made a really good point there actually about the GDPR bringing the focus back to the customer, and I think it's really important to keep that in mind when you're thinking about the best way to address GDPR compliance. And breaches are no exception to that. So under the GDPR, we're seeing much broader and more stringent obligations to notify, first of all, regulators in the event of a data breach, and also affected individuals where there's likely to be a high risk to those individuals. So it is very much about transparency, accountability, giving customers back control over their data. So I think that's an important overarching concept to keep in mind. In terms of whether breaches should be a priority item for financial institutions, I would say yes, they have rightly been identified as a high priority for businesses in this sector. Of course, given the nature of the data that they handle, financial institutions are an attractive target for malicious actors in this space. Clearly, the potential risks to individuals, to customers are high. And there is the potential for high fines here as well. And it's worth pointing out actually that many of you, I'm sure, who are listening to this webinar will be aware that there's a dual tier system of fines under the GDPR. So lower tier infringements are subject to a maximum of 2% of global turnover or 10 million euros, and higher tier infringements 4% of turnover or 20 million euros. Now, breach of the notification obligations in relation to breaches is, strictly speaking, a lower tier infringement. So still potential for high fines, but not treated as the most serious. It's worth noting, though, that in reality, I suspect many times where an organisation comes under scrutiny for its handling of a breach, fault is also going to be found in relation to the technical measures that organisation, and banks are no exception, has taken in relation to the data that it holds. Has it taken adequate security measures to protect that data or not? And if a regulator finds that, in fact, the technical measures taken to protect the data were not adequate, potentially we're then looking at a maximum 4% fine rather than a 2% fine. So that point is worth keeping in mind. There's a few points that I would flag for financial firms specifically in relation to breaches. First of all, to mitigate the risk of a breach occurring in the first place, and also ensuring it's properly dealt with if so. And I think given the high risk nature of financial institutions, many organisations in this space will be doing many of these things already, but it's still worth highlighting these points, I think. So, I mean, the first point I would make is it will be critical, bearing in mind what I've just said about the fines, to work closely with IT and information security teams to make sure that appropriate technical measures are being put in place to protect the personal data that financial services firms are processing. So we're talking here about things like the use of encryption, two-factor authentication, password protection, access controls, pseudonymization, measures of that nature. It will be absolutely key as well to put in place a procedure for dealing with data breaches that will help the firm comply with its GDPR reporting obligations, both to regulators and to any individuals who are affected. And in particular, we have a new requirement under the GDPR to notify most breaches to regulators within 72 hours of becoming aware. Now, that's obviously a pretty tight time frame. It doesn't make allowance for weekends or public holidays. It starts to run as soon as the controller becomes aware, even if that's on a Friday evening. So having a procedure in place to make sure that you're able to react quickly on discovering a breach is going to be absolutely crucial. Training, on a related note, is also going to be really important, I think. So rolling out training for employees to complement that data breach procedure, ensure that staff are aware of it, ensure that it's actually followed in practice. And finally, reviewing your supply chain and any third-party vendors involved in the provision of financial services. So here, I would encourage financial services firms to look at the due diligence they carry out on their vendors currently, Do any contracts that you have with third-party vendors contain data protection provisions? What kind of due diligence are you carrying out? In particular, are you looking at the kinds of security measures that your vendors take to protect the data that they process on your behalf? Are they following any recognized industry standards like the ISO standards? And it's also worth flagging here that any existing vendor agreements will need to be updated to make sure that they contain GDPR compliant data protection provisions, because the GDPR is very prescriptive as to the contractual clauses that will have to go into agreements between controllers and processors. So updating those agreements, potentially quite a big piece of work, and one that financial services firms and other controllers as well would be well advised to start sooner rather than later. Just one final point that I would make here, which is that in addition to the notification obligations that exist under the GDPR, there's additional notification obligations that may apply to some financial services firms under the NIS directive, or the Directive on Security of Network and Information Systems. So this is another EU level regime, but one that is separate from the GDPR. And the notification obligations apply only to operators of essential services and certain digital service providers. So digital service providers actually in particular is quite broadly defined, and that will capture, among other things, cloud providers, online marketplaces and search engines. So it is possible that some financial services firms or fintech firms may be caught by those obligations. So it's just worth flagging that in addition to the GDPR notification obligations, some firms operating in this space may also need to think about additional notification obligations under NIS. So given all of these changes, in the regulatory environment in relation to data breaches, I would say this is definitely a high priority item for firms operating in this space, definitely one that should be high on your agendas and looking at in some detail.
Yep, fantastic. And Ria, what are your thoughts in terms of breaches and financial services IT budget allocation?
Well, I think there's quite a few topics covered well already, but what I could add on the GDPR that implementing the data subjects' rights in this context, it may be necessary to renew architectures, build new ones, or develop or buy scripts and other solutions. So, for example, if there are old systems, it may not be possible to erase or restrict data, and using alternative risk-based methods such as anonymization, it may not be possible because it may break the business functions. For example, reporting. Ensuring that you have the necessary capabilities is an investment. It will depend on the current starting point, how much you will need to invest, finding the exact figure, I think you will need the DPO and the CISO and also the business partners to work together to find out what kinds of investments are needed and then to find a budget for it. I think that is the umbrella level budget allocation I can provide.
I mean, I certainly think it's interesting that you say that there'll be some legacy systems that just may not be compatible with GDPR at all. That sort of moves quite handily on to my next question, which is, is partnering with solution vendors that specialize in GDPR the only route to GDPR compliance? And we've had some questions from the audience as well, sort of on a similar note, which is sort of asking questions around what are the key challenges around ensuring that those third-party providers are GDP compliant. So really sort of building on your last answer, what are your thoughts on that?
Well, I don't think partnering with the solution vendors is the only solution. This is very much dependent on the in-house resources, though. If you can build a functioning GDPR program and BAU in-house, then you don't need the solution vendors or external help. One thing that may be a challenge, though, is the resources, which are quite scarce at the moment, at least. However, you can also invest into training your own personnel, developing in-house models and solutions, and having a short-term and long-term model how to comply may also help. On the challenges of ensuring that the third parties are compliant, I would build an extensive or solid vendor or third-party risk management model. So having vetting processes and centralized IT and other procurement, good vetting matrix for different services and products. You could match the vetting process with a clear contract management model, so you would feed from the vetting process into the contracts and appendixes. And as Joanna said, there are very specific things that have to be addressed in the contract between the controller and processor. So it would help to with the communication process in this respect as well. You can ask the vendor to provide documentation on how they implement the privacy by design, or at the time when the GDPR certifications will be made available, they could be considered to indicate certain level of compliance. The controllers can also audit the processor. And one thing that I would highlight also in the contract management is that the roles of the controller, joint controller, and the processor are analyzed and then clearly set out in the contract governing these relationships. Defining the responsibilities and limits to the rights is important, because the liabilities and the responsibilities are if there is a situation when there is the enforcing authority making a decision on who is the controller and processor and who is liable for what, they will be looking at the facts of the case instead of what is written on the paper.
Fantastic. And Dov, as a representative of vendor yourself, do you have a slightly different opinion on kind of the role of third-party solution providers in sort of tackling GDPR?
I agree with Ria that you could rely on in-house or commercial solutions. To me, the decision hinges on other factors. So I'm going to riff a little bit on Ria's point about centralizing IT and other procurement regarding assessing third parties, such as your data processors. A few points here. Privacy and IT risk are generally managed by different stakeholders. You've got a chief privacy officer, data protection officer, and a CISO, for example, chief information security officer. But concerns about information security risk and GDPR privacy risk are so directly related, as Joanna strongly implied earlier in her point about working closely together to prevent breaches. IT risk must know what types of data third party data processors handle before they can scope controls for their assessment, the IT risk information security risk assessment. Is it that different from GDPR, doing a GDPR assessment? It's not. It's not at all different. Collaboration between the technical teams, information security, and the more legal-oriented stakeholders, the privacy teams that are generally going to be responsible for GDPR, is essential for effectiveness and efficiency. And from that perspective, privacy and GDPR, more specifically, should really be part of a coordinated overall effort to manage third-party relationships, as Ria pointed out. Otherwise, effort is duplicated, both internally and by vendors who you're collecting material from, you're asking questions of. So the vendors, the data processors, have to be part of the collaboration as well. The legal teams, the privacy teams, need the technical expertise of information systems to understand the inherent risk of any data processor relationship. They really need that technical help. And by rights, they should be using data that may have already be collected by the information security risk teams to perform their privacy risk assessment. So how do you choose the best solution for assessing third-party risks? I'm speaking specifically about GDPR, but in general about all technology and data-related, privacy-related third-party risks. And you have to find a solution or build a solution that facilitates organic collaboration between all of the stakeholders, in this case represented by IT risk, the privacy people, and the vendor community that you're relying on for a lot of your outsourced data processing.
And John, is there any sort of legal perspective to that use of third parties as a strategic crossroads for financial services?
Well, I really just agree fundamentally with a lot of the points that Ria and Dov have just made. I would say partnering with solution vendors isn't the only route by any means, although it may well prove useful if the firm in question doesn't have the expertise internally to identify all the data that it holds. If budgets are slim, resources are slim, there are small IT teams, sometimes this can be a good solution. But the point that I would really stress here, which picks up a point that Dov just made actually, is that compliance can't be outsourced. It remains the responsibility of the firm. And I would question in the long term whether engaging a third-party solution vendor is necessarily the best way to embed the culture of privacy that I think the GDPR is fundamentally targeted at encouraging. Is it really the route to long-term good data protection compliance? Sometimes possibly yes, but I think a lot of businesses in my experience are very focused on the May 25th implementation date and aren't really thinking in the long term beyond that. They're thinking of it as a kind of deadline to achieve compliance, and then they'll start to focus on the next big piece of legislation and the GDPR will get forgotten about. And I think it's really important not to think of it in that way. Compliance has to be an ongoing obligation, and I think many times the most effective way to achieve that will be actually to deal with as much of the compliance work in-house as resource will permit. That would be my take.
Yeah. And I obviously attend a lot of fintech conferences and speak to members of the financial service industry on a regular basis, and there is, today there is such a heavy emphasis placed on the value of data. Constantly hearing data is the new oil, data is more valuable than money, etc. So, do you think that the GDPR and the GDPR challenge, do you think that challenges the notion that data is valuable, or does it strengthen that position further?
I don't have to think about that for too long in order to answer it. It's very clear that GDPR underlines and highlights the value of that data, but it also emphasizes the relationship with the customer. The data comes from somewhere. As I said earlier, GDPR forces us to consider the value of our custodianship of our customers' data. What's the value to the customer of us having that data? And we have to make explicit the value of that data and how we can enhance the customer's life. In other words, why are they going to give us the data? Let's make sure it's absolutely clear. Or we have to be able to come up with a good reason why we're going to enhance all of our customers' lives when big data gives us insights that help us improve our product. And so now I think it's clear. GDPR, it just reinforces this idea that data is the most valuable of all commodities.
And Joanna, would you echo that thought as well?
I would absolutely agree with that. I think the GDPR very much strengthens the notion that data is the new money, as it were. Both the GDPR and the other recent legislation as well affecting banks essentially reflects the principle of giving users more rights over their data and recognizing the potential value of that data. And much in the GDPR really is ultimately about ensuring that control of personal data rests with the individuals that it relates to and not the organizations that collect and process it. So I would definitely agree with that.
And Ria, would you kind of add anything to what Dov and Joanna have already said?
Well, I definitely agree with Dov and Joanna about the value of the data. I think knowing what data you process and being sure that everything is accurate, it gives the company an advantage to make more accurate decisions and potentially streamlining processes. The banks or several of the banks will also be dealing with the Second Payment Services Directive, and having really solid data management processes in place will facilitate the possibility to partner with new service providers and create additional value for the customer of the bank. The better the banks know their own customers and the data they hold of them, the better they can actually answer to what the customer is looking for from them as a service provider.
Yeah, and I think I would certainly agree with all of those perspectives as well. Just going to be one final question from me before we start looking at questions from the audience, and that is sort of the inevitable question around Brexit. Is the impact of Brexit on GDPR clear yet? Perhaps we could start with Ria on that one.
Well, the current negotiations aim for an adequacy decision. This is not achieved yet, and if there is no adequacy decision, then there needs to be an alternative data transfer tool. This could be, for example, binding corporate rules, which come GDPR can also include entities which are not part of the company itself but share economic interests. Putting it shortly, the answer to the question is that the impact is not yet clear. The current data protection bill does implement the GDPR into the national law, but there are other applicable pieces of legislation which will have an impact on the relationship of the UK with the European Union and whether the adequacy decision will be given by the Commission.
And Joanna, perhaps you could kind of finish off the sort of the Brexit conversation with your thoughts.
Sure. So, I mean, much, of course, does remain unclear as far as Brexit is concerned. But as Ria said, we do know at least what the government wants to achieve as far as data protection is concerned, which is to incorporate the GDPR into national law, supplemented by the new data protection bill, which is currently before Parliament. There are good reasons for the government to want to do that. Essentially, if we can achieve a high degree of equivalence in our data protection regime after Brexit with the EU, then that will strengthen the argument as to why the Commission should make an adequacy finding in respect of the UK, which would mean that we can continue to pass personal data freely between the UK and the EU, so that there are very good reasons for the government to take that approach. But that said, I mean, an adequacy decision is ultimately going to be, in my view at least, a political decision. I don't think that it's likely that the EU27 will look at what the UK data protection regime is in isolation. I think much depends on how the Brexit negotiations more broadly play out and what kind of trade deal the UK ultimately ends up with. And I think that really is all going to feed into the equation as to whether the UK is treated as a third country or not from the perspective of international data transfers. So it'll be interesting to see where we end up landing on that one.
Of course. I mean, that's fantastic. So I'm going to thank you, everybody who has submitted questions for the panel, both in signing up for the webinar and also during the event. What we're going to do now is probably spend another sort of 10 minutes or so trying to get through as many questions as we can. If we don't get through all of them, then what we will do is we will ask the panel kind of the remainder of the questions offline and I will sort of use those answers to put some content together for a box guide article. So we will try and get through as many as we possibly can. The first question that we've had the first question we're going to look at is from Dave Harrison at PaySavvy. How far will existing PCI DSS compliance assist in becoming GDPR compliant? I'm just going to throw these open to the panel so you guys can kind of chip in where you feel necessary.
Okay, I'm happy to start with that one, Alex. So PCI DSS is an industry standard for card payments. It's not specifically mandated by the GDPR. The GDPR essentially leaves open to data controllers what kinds of security measures they decide to take with respect to the data that they process. It very much takes a risk-based approach to data security, and it recognizes that different technical and organizational measures will be appropriate to protect different types of data and in respect of different types of processing. The requirement under the GDPR is just to use appropriate technical and organizational measures to keep data secure, and it acknowledges that that should be based on the availability and the cost of suitable technology and also the likely level of risk to individuals. So what measures are appropriate is very much context dependent. In my view, following PCI DSS security standards is very likely to be helpful in demonstrating compliance with the GDPR data security obligations, but I would still stress that while existing PCI DSS compliance is going to be helpful, the GDPR is about much, much more than just data security, and so even organizations that are PCI DSS compliant are still going to have a substantial amount of additional work to do to reach the compliance standards required by the GDPR.
And Ria, have you got any thoughts on that one?
Well, I definitely agree with Joanna that it's helpful. I think overall, evaluating the overall compliance, if you comply with recognized industry standards in general, such as ISO or PCI DSS, it does indicate that you use the best practices and industry standards, meaning you consider the state of the art and possibly different sector-specific standards. And also the point that Joanna made about the GDPR being much more, I definitely agree. While this standard addresses security, it's also good to keep in mind that data protection and privacy are also included in the GDPR. And for example, when the data processing is considered high risk for the data subject, such as in the context of payment card data, then the data privacy impact assessments are mandatory. So incorporating security is one aspect, and another is implementing privacy by design and default principles. So in addition to complying with the standard, I would ensure that privacy is also considered and addressed adequately. And yeah, GDPR is about all-around compliance in relation to all the data you process. So appreciating that production data is probably one of these main focuses that companies have. But then there is, for example, the HR-related data that you hold on your employees and job applicants and previous employees. So taking a comprehensive model into compliance is recommended.
Yes, fantastic. We've got two questions here that are very similar, so I'm going to ask them at the same time. And again, John, I think this might be one for you. We've got a question from Kirsten Hyde that says, what are the most important steps financial institutions should take to ensure that they comply with both MiFID II and GDPR? And a similar question from Simon Shepherd at Myriad saying, do aspects of MiFID II conflict with GDPR, e.g. the need for transactions to carry name, date of birth and ID numbers for each person involved in a trade?
Yeah, I'm happy to take that one, Alex. So I think there's a lot of anxiety in my experience about how do we comply with our obligations under financial services legislation on the one hand and GDPR requirements on the other hand. And I think in particular what I'm seeing is a lot of anxiety on that point in relation to data retention, data deletion, the right to be forgotten, so to respond to a request from an individual to have their personal data erased. And I would try to reassure providers operating in this sector. I don't think that there necessarily is a conflict between MiFID II or indeed other financial services legislation and the GDPR in this respect. And the reason why is that the GDPR actually does take account of the fact that controllers and processors sometimes will need to process personal data to comply with legal obligations. And processing includes storing and retaining data for a period of time. So if MiFID II imposes obligations to retain transaction data for a specified period of time, then you would rely on that as your justification to retain the data for as long as you need to comply with that particular obligation. The GDPR does actually say that compliance with a legal obligation to which a controller is subject can form a lawful basis for processing personal data. And then as far as the right to erasure, the right to be forgotten is concerned, again, we have a carve out there from that right in cases where data is processed to comply with legal obligations. So if you receive a request from someone asking to delete their personal data, but you actually can point to a concrete legal obligation that means you need to keep that personal data for a period of time to comply with other legislation that you are subject to, then the right to be forgotten actually doesn't apply. So you are entitled to retain that data, notwithstanding a request to have it deleted, if you actually need it to comply with a legal obligation to which you're subject. I would just make the point here, though, that personal data that's processed to comply with MiFID II or any other financial services legislation will still need to be processed in compliance with the GDPR generally. So you would still need to put in place, for example, appropriate security measures to protect that data and observe privacy by design and by default principles and so on. The regimes overlap and complement one another, but I wouldn't say they conflict. I think that there are ways that we can find to reconcile the two.
Fantastic. I actually think we, as I sort of suspected we might, I think we've run out of time. As again, thank you everyone who has submitted questions as part of the Q&A. As I said, what I will do is I will endeavour to put those questions to the panel and hopefully create some additional content for Bob's Guide in the coming weeks. So make sure to check out the website for that content coming up. We'll also be making this webinar today re-available as a downloadable podcast. That again can be accessed through the Bob's Guide homepage. I think that just leaves me to say thank you again to our panel, to Joanna, to Ria and to Dov. It's been fascinating and very insightful speaking to you all today. Yeah, thank you. Hopefully we'll see the Bob's Guide audience again for our focus next month, which is going to be on blockchain in financial services. So thank you everybody, and have a good day.
Thank you very much.